Are you tired of chasing the next big thing only to watch your hard-earned money disappear? Have you spent countless hours researching speculative stocks, cryptocurrencies, or get-rich-quick schemes with nothing to show for it but frustration and a lighter wallet? It's time to stop the cycle. It's time to stop wasting your time on financial gambles and start focusing on what actually works. What if I told you that building real, lasting wealth isn't about finding a needle in a haystack or timing the market perfectly? What if it's about a strategic, proven system for generating consistent, reliable income? Today, I am pulling back the curtain on the world of smart investing to reveal 3 powerful investments that don't just sit there. They actively print cash. These aren't trendy, high-risk plays you see hyped up on social media. These are the foundational pillars that the world's most successful investors use to build unshakable financial empires. We're going to ditch the hype, ignore the noise, and focus on practical, proven strategies that put money back into your pocket, month after month. Forget the lottery tickets and the speculative bets. Your journey to financial transformation, powered by assets that generate real cash flow, starts right now. Let's get straight to it. The first investment that consistently prints cash is high-yield dividend stocks from established blue-chip companies. Now, I know what some of you might be thinking. Stocks? Aren't they volatile? Risky? Yes, the market has its ups and downs, but we're not talking about just any stocks. We are targeting a very specific category, the titans of industry. These are the companies that have been around for decades, the household names that have weathered recessions, market crashes, and global crises, and have come out stronger every single time. Think about the brands you use every day, the company that provides your electricity, the one that makes your favorite snack, or the healthcare giant that produces life-saving medicine. These are the stalwarts we're looking for. What makes them so powerful? It's their commitment to sharing profits with their shareholders in the form of dividends. A dividend is a direct cash payment from the company to you just for owning a piece of their business. It's your reward for being an investor. While other stocks might offer the potential for growth, dividend stocks offer you both growth potential and a steady, predictable stream of income. Imagine receiving a check in the mail or a direct deposit into your account every 3 months, like clockwork. That's not a hypothetical. That's the reality for millions of dividend investors. Let's look at a real-world example. Consider a company like Johnson & Johnson. For over 60 consecutive years, they haven't just paid a dividend, they've increased it every single year. That's through the dot-com bubble, the 2008 financial crisis, and the recent global pandemic. An investor who bought their stock decades ago isn't just collecting a dividend based on their original investment, they're collecting a much larger one that has grown year after year. This is the power of dividend growth investing. You are not just buying a stock, you are buying a piece of a cash-generating machine that has a proven history of rewarding its owners. The key is to focus on companies with a strong economic moat, a durable competitive advantage, and a long, uninterrupted history of increasing their payouts. This isn't gambling, it's a calculated strategy for creating a passive income stream that grows over time, literally printing cash for you while you sleep. Now that you have a powerful income stream from dividend champions, let's move on to the second investment that prints cash: real estate, specifically through rental properties and real estate investment trusts, or REITs. There's a reason why the phrase "safe as houses" exists. Physical property has been a cornerstone of wealth creation for centuries. Why? Because it serves a fundamental human need: shelter. People will always need a place to live, which creates a consistent and reliable demand for rental housing. As a landlord, you're not just owning an asset that appreciates in value over time, you're running a business where your tenants are essentially paying off your mortgage and putting cash in your pocket every single month. Think about it this way. You purchase a duplex for $400,000 with a 20% down payment. But what if you don't have the capital for a down payment or don't want the hassle of being a landlord? That's where REITs come in. A REIT is a company that owns, operates, or finances income-generating real estate across a range of property sectors. By buying shares in a REIT, you can become a fractional owner of a massive portfolio of properties, shopping malls, apartment complexes, office buildings, data centers, without ever having to fix a leaky faucet. By law, REITs are required to pay out at least 90% of their taxable income to shareholders in the form of dividends. This makes them one of the most powerful cash flow investments available in the stock market, often providing higher yields than traditional dividend stocks. Whether you choose to own physical property or invest through REITs, you are tapping into one of the most reliable cash printing machines in the financial world. We've covered equities and real estate, two titans of income generation. But to truly fortify your financial future and create a truly resilient cash printing portfolio, we need to introduce a third, often overlooked, asset class: private credit. This is where you step into the role of the lender. For too long, the lucrative world of lending has been dominated by big banks. But thanks to financial innovation, individual investors can now participate in this space and earn attractive, steady returns. Private credit involves lending money directly to businesses or individuals through specialized funds or online platforms, bypassing the traditional banking system. So how does this print cash? When you invest in a private credit fund, you are essentially pooling your money with other investors to provide loans to established, cash-flowing businesses that need capital for expansion, acquisitions, or operations. These businesses pay interest on the loans, and that interest is passed directly to you, the investor, typically in the form of monthly or quarterly distributions. The yields on private credit can be significantly higher than what you'd find in the public bond market, often ranging from 8% to 12% or even more. Why? Because these loans are not traded on a public exchange, and they cater to a specific market segment that banks may not serve as efficiently. Let's look at a concrete case. Imagine a successful mid-sized manufacturing company needs a $5 million loan to buy new equipment to fulfill a large contract. Instead of going through the slow bureaucratic process of a big bank, they turn to a private credit fund. The fund performs its due diligence, underwrites the loan at a 10% interest rate, and secures it with the company's assets. As an investor in that fund, you start receiving your share of those interest payments immediately. Your investment is backed by the real assets and cash flows of a functioning business. This strategy provides a consistent income stream that is not directly correlated to the daily swings of the stock market. While stocks and real estate can be volatile, the returns from private credit are based on contractually obligated loan payments, offering a layer of stability and predictability to your portfolio. By becoming the bank, you are positioning yourself to collect a steady stream of interest payments, another powerful engine for printing cash. So there you have it. 3 powerful, proven investments that don't rely on hype or speculation, but on the fundamental principles of cash flow. High-yield dividend stocks from blue-chip companies, income-producing real estate and REITs, and the steady, high-yield returns of private credit. Each of these strategies on its own is a formidable tool for wealth creation. But when you combine them, you create a diversified, resilient, and powerful financial engine that is designed to print cash for you in any economic environment. You are no longer just a passive observer of the market. You are an active owner of businesses, properties, and loans. Stop wasting your precious time and capital on fleeting trends and empty promises. The path to financial freedom isn't a sprint. It's a marathon built on smart, strategic decisions. It's about allocating your resources to assets that work for you, generating income streams that build upon each other through the incredible power of compounding. The choice is yours. You can continue chasing shadows, or you can start today, right now, by focusing on these 3 pillars of wealth. Take that first step. Do the research. Allocate a portion of your portfolio to your first dividend stock, explore a local rental market, or investigate a reputable private credit fund. Start building a future where your money works harder for you than you ever worked for it. The power to transform your financial life is in your hands. Seize it.